Good morning, traders. Welcome to the live stream. Let me know in the chat, can you see me? Can you hear me? Is everything working properly? If you're joining us for the first time today and you have no idea who I am or what the heck is going on, my name is Charles Gough, and I come from a community called Pirate Traders, where we are focused on the ES, the NQ, and how they move through the two-way auction process. So when I say how the market moves through the auction process, what exactly am I talking about? Every move that the market makes, whether it's going up, it's going down, or it's just going sideways, there's a process that it goes through. On the way up, it is a process of bringing in new buyers and convincing them that the market is going to keep going up. Frito says I'm seen. Am I heard, Frito? Can you hear me? So the process of pushing the market up, that is an auction up. A process of pushing the market down, that is an auction down. And a range is a sideways auction where the market is just going sideways. And so we're always trying to figure out, where are we in this auction process? Are we in the process of going up or down, or are we in the process of going sideways? Sorry, can one person just verify that you can hear me? Everybody's saying good morning, but nobody's saying I can hear you. Just want to double check that the mic is working. So over the last few months, and it has been months, this market has been balancing. All right, if you look at this, this is just a market that is going sideways. It's a market that's going nowhere. All right, I got a thumbs up and a yes. Okay, so you can hear me. Thank you. So what does that basically mean? It just means there's been a lot of indecision. The market has been bouncing around here. You know, it's been poking up and making new highs, but just barely. Right? Just barely making new highs. And generally the last few even were in the overnight session, not even in the regular trading hours. So ultimately the market just doesn't know what it wants to do next. It doesn't know where it wants to go. There's nobody willing to make a bet, willing to risk being wrong, either going long or short here. And so we've just been bouncing around in a range. Okay, so this is like over the last few months. We could zoom in and even just look at over the last week or two. Right? We were stuck in a much smaller range, a range inside a range, which I've drawn as this channel right here. Okay. That's the highs and the lows of that range. So again, we were just stuck going sideways for a week and a half, 2 weeks inside that range. Okay. Well, now we broke out of that first little range, that little last couple of week range to the downside. That's what we did this morning. That could lead to basically one of two outcomes. Either we continue our momentum in that direction, or we reverse, come back into that balance area, and then rotate back up to the top. One of those two things is going to happen in the days ahead. And depending on which of those two things happens will help us understand on this longer time frame, are we in balance or not, right? Are we going to just turn around and head right back up to the all-time highs from here? Or are we going to break much lower? Do we need a much larger pullback, you know, sort of an all-out correction in order to bring in buyers? Well, we can only take it one step at a time. So what is that? How do we make those decisions? Well, this morning, the first question we're asking is, how does the market handle the gap? Okay. So obviously, for those of you that don't know, there's now another war going on in the Middle East. And so that is the reason why the market had this big sell-off over the weekend. This is an emotional reaction to the news that we are going to war. That does not mean the market is going to go down. You guys need to understand, a lot of times, even if the market is going to turn around and go to new all-time highs, it will liquidate first. Something like this, some sort of shock and awe event, will cause a lot of people to panic out of their longs. And when you squeeze out those weaker hands, those participants that are more likely to be squeezed by some bad news, well, then you start bringing in stronger hands. There's that expression, buy when there's blood in the streets, right? The people that were buying the overnight lows last night, they were buying blood in the streets, okay? They were buying fear and panic. So that just in and of itself increases the odds. If you understand the auction process and you understand how things work, the fact that these buyers bought the seller's fear and the sellers were just longs getting liquidated, okay, already increases the odds that we got strong hands in the market and that we're going to turn around and head higher. So just because the market gets this bad news that war has begun and it liquidates as a reaction to that does not necessarily mean the market is going to keep going lower. Now, it absolutely can, but it doesn't have to. So the first thing that we're watching this morning is the gap down. We measure the gap from Friday's low, whatever was the low of the day in the previous regular trading hour session. So in this case, that's Friday's low, around 68.41, to wherever we are when the market opens. So we're still 20 minutes from the market opening, but let's just say we were right here at 68.10. That's then a 31-point gap, okay? The gap is the distance between Friday's low and the current open, wherever we open this morning. Now, once the opening bell rings, okay, we have no idea what the market is going to do. The market may just grind around and go sideways. It may poke back up and fill the gap. It may immediately start to sell off and go lower. It may poke up and fill the gap and then turn around and sell off and go lower. It may poke up, fill the gap, and then continue to bring in new buyers and go higher. We have no idea when that opening bell rings. But the one thing that we do know is that the market should at least try to fill the gap. It should at least try to make a move up. Now, that move may only be a couple of points, but it should make some sort of attempt to fill the gap. And the second thing that we know, because it's a 30-point gap, at least for now, and again, we got plenty of time before the market opens. It may be a smaller gap by the time the market opens, but if a gap is this large, if it's more than 20 points, it is less likely to fill right away. So what does that mean? Right out the gate, we are expecting the market to at least try to go up. But if it can't go up 30 points and get to Friday's low, the market is telling us we can now limit the number of possibilities for what could happen today down quite a bit. We started off with maybe it goes straight down. Maybe it just goes sideways. Maybe it fills the gap and then goes down. Maybe it fills the gap and then keeps going up. We have all these different things the market could do. But if the market tries to fill the gap this morning and it can't, and it turns around and starts heading down, well, now it's only one of two things that it could be doing. The first is what we call a gap and chop, which will basically just mean we're going to spend a few hours going back and forth through that opening price. They're going to make it look like the market's about to go up, then they're going to reverse and make it look like the market's about to go down. And they can do that for hours. Just keep passing through that opening price, keep faking everyone out one direction and then reversing the other. So that would be the first possibility. If we cannot fill the gap today, then maybe they just want to chop and spend a few hours grinding up and down through that opening price. The other thing is if they try to fill the gap and they can't, it might mean we're going to sell off today. It might mean that this market wants to head much lower, that the fear that the overnight traders had will also be the fear that the regular trading hours will have, and that we will continue lower. So what is the first thing we're paying attention to? Where's the opening price? Right? We want to know where that is. Does the market try to make a move to retrace? If it does, where does it find resistance? Once it finds resistance, what does it do next? So let's say, for example, the market opens, it pushes up to 68.28, finds resistance there, it turns around and starts coming back down. The next thing we'd be interested in is what happens when we cross through that opening price. Do we cross through the opening price and then start to liquidate lower? Or do we cross through the opening price and then turn around and come right back up? If we turn around and come right back up, we know it's the gap and chop. So we know the market's going to go sideways for the first few hours of the day. So we're going to be prepared for that. If we're going to take trades, we're going to be taking trades for that, right? If the market pushes up, gets that resistance, comes back through the opening price, and it just gets more new selling, either through liquidation or it comes back up and gets resistance, well, then we know the market is going lower and we want to be getting short as quickly as possible, okay? If this is going to be a gap and go, which is the market opens with a gap down, tries to fill the gap, cannot fill it, and then turns around and heads in the direction of the gap and go, that is the most bearish scenario you can get for a day. So if we get that this morning, we know, one, we have to get short very quickly. We can't wait around to get short. We got to get in that short as quickly as possible, because the longer we wait, the worse the odds are the trade will work. If you get short at 6800, right? You're going to have much better odds of being able to take profits on that than if you were to get short down at, say, 67.82. Okay. So wherever the opening price is, once we come back down and cross through it, we need to be ready to get short immediately for that gap and go. Okay. Now, if it ends up being a gap and chop, we don't get mad. We just accept that it's going to be a gap and chop, but we're ready to get into that momentum trade if it is going to be a gap and go. As far as downside potential, I think it is very reasonable if we get a gap and go this morning to come back down and repair these weak references at 67.75 and 67.70. Okay. So if we're looking to get short earlier on in the day around that opening price, again, after the market has tried to fill the gap and failed to do so, if we choose to get short, then we have a pretty good distance. There's a pretty decent 30 to 40 point range where we can make money on the way down. The same thing is true if we try to take a gap fill trade. Let's say the market opens and instead of going up first, it starts going down instead, right? We know it should try to go up. So if it opens and it immediately starts to sell off and then it turns around and it comes back through that opening price, what is it telling us? It's trying to fill that gap. So again, we can get in that trade as quickly as possible and we have a 30-point move that we can make money off of. Okay. So that's step one to the market this morning. Are we going to fill the gap, get back up to Friday's low? Are we going to gap and chop, just grind around? Or are we going to gap and go, start heading down towards the overnight lows? Which of those three is going to happen? And then depending on what happens next will help us understand what's going to happen next. I'll give you the quick walkthrough, but really this is why you got to join the brigade so that you can be there with me in the live streams in these moments so I can explain in real time as these things are happening. But essentially, if we fill the gap, we either get resistance and continue lower, or we stay inside yesterday's range. If we get resistance, we're bearish to come back down through the opening price. If we stay inside yesterday's range, spend time and bring in volume, then we are bullish to head up to 68.58. I'm not really sure the market can get much further than that. So that to me is a great place to take profits on a long, whether you get in a gap fill long or you, after the market, fills the gap, you get long once you see that you're spending time and bringing in volume. Either way, a good target to the upside is going to be 68.58 today. Not that the market could not keep going. It can, but just that this one is the highest probability in my mind. Okay. So that's if we get the gap fill. If we get the gap and chop, we have no choice but to just wait for whatever market generated information the market gives us. That will be based on tempo and volume. It'll be based on what the taper looks like at the edges of the range. And then what happens when we come back and explore that area again. So as long as we keep chopping, we just have to accept that it's going to keep chopping. And we wait until we break out of that range, that chop zone, then we look for the next trade. Okay. And then if we start to get the gap and go to the downside, as I said, the ultimate target is going to be that overnight low. It's going to be around 67.70. I do think there's a very good possibility if we get a gap and go this morning that we could do that and even much further. Okay. Because of emotions, right? If the market has spent the last few months winding up tighter and tighter and tighter and tighter and tighter and tighter, it's set to burst. So if that burst happens to the downside this morning, we can get a move, a big one. Okay. But if it doesn't burst, if we pull back up and we fill that gap and we don't get resistance, well, then guess what? We're just going to keep rotating. We're going to stay stuck in this balance. So you have to recognize that both of those are possible. Just because people are scared about the war doesn't mean stocks have to go down. Historically speaking, generally stocks go up because of war, not down. So if the initial move is panic, that's just a liquidation. And it doesn't mean we're going to get new selling once the opening bell rings. Any questions on any of that from the chat? We got Will in the house. Rich is here. Frito. Tom. Michael. Silver Media. Laura. Catherine. James. Shk 230. Trevor in the house. Good morning to you. Bill is here. Crypto Writer. Laura says, NQ, please. Yeah, let's take a look at the Q. Let's look at the Q, see what it's going to do. Laura, it's for you. Okay. Yeah, so very similar story here. Not exactly the same, but it certainly rhymes. So it's the same idea. The NQ has been in balance. It's been chopping and grinding and chopping and grinding. You could actually draw a really nice horizontal balance area here. Let me just stretch this out. Oh, it just keeps stretching. There we go. Okay. So this is your balance area on the NQ right here. Okay. So this is basically for the last month and a half. This has been the balance area that you've been in. And so the market is trying to break out of that balance. Okay. So same thing we talked about with the ES. The first order of business is the gap down. That will be the distance between Friday's low, which is at roughly 24,790. Okay. And wherever we open today, which let's say it was 24,620. Again, that's a very large gap, meaning it is less likely to fill today, meaning we have a higher probability of either chopping around or immediately going lower in the first hour today. Okay. So same as the ES, it's the exact same playbook. Can the market fill the gap? And if it can't, what happens as it comes back down and crosses through the opening price? Okay. That'll be the first question to ask. If you get a gap and go, so if it tries to fill the gap and it cannot, and it turns around and comes back down through the opening price, then you too have good odds that you're going to head to that balance area low. Now, for different reasons, you're heading to it because it's a balance area low, as opposed to, I would actually draw it a little bit higher than that. I would say that's the balance area low right there. Yeah, even right here. So yeah, so you get the gap and go this morning. You're targeting a move at the very least to around 24,540 to the downside. And then if you get new selling down there, just like we talked about with the ES, that means this market could really move to the downside. So if it gets down there below that overnight low, which is 24,470, if it gets down there below that overnight low and it starts to get resistance, it starts to get new selling, excuse me, new selling down there, you could be looking at a very big move to the downside in the days ahead. I would say at the very least, something like 23,650. Okay. So you're talking about literally a 100-point move in the next couple of days. If we get a gap and go this morning and we get new selling down below the overnight low, then you could look for that much bigger pullback. If you had to put a gun to my head right now and ask me to pick what I think the markets will do, both ESN and Q today, I think their first move is going to be to try to fill the gap. And I don't think they will be able to. And then it'll turn into either a gap and chop or a gap and go. I cannot predict yet which of those two. I need more information. I got to see what happens when the chart opens and the thing starts moving to be able to predict for sure what will happen next. But in my mind, both of these gaps are pretty large gaps. So if the market wants to create momentum lower, it should not need to fill these gaps today. We should be able to instantly start selling off, after, say, the first hour. So my prediction for both markets is that it's going to be a little choppy and then bearish. But we just got to wait and see. Like I said, this is one of those mornings where anything could happen. We already squeezed a bunch of weak hands, so we could turn around and just start heading straight up from here. And we just won't know until that opening bell rings and we see how the market reacts. Any other questions? Jason says, smash the like button for the captain. Yes, please. One small thumbs up from the 87 of you that are hanging out here right now. One small thumbs up from you might get us to 150 people. You'd be surprised how this algorithm works. So spread the love. Give the thumb. Spread the love, give the thumb. That one might be taken out of context. Trevor says, why does the opening price play such a big role in the market's daily sentiment? It's a good question. So essentially, people have to make decisions, right? When they're deciding to enter trades. And the only way to make a decision is you got to have some sort of framework for making that decision, right? You can't just randomly decide, go long, go short at any given moment. So we use price levels as a way to do that as traders. We use specific price levels to tell us, if price goes here, if it goes there, if it crosses through this, if it holds support here, we use those price levels as a way to make those decisions. And so when you understand what are the important price levels, what are the price levels that make people change their mind? If somebody is bullish, where's a price that you could go through that would make them no longer bullish? It would make them want to be bearish, or vice versa, right? Those are the key levels that we pay the most attention to intraday, because those are the levels where we have an opportunity to see that change happening. So we may not know, if the market is going to find resistance at yesterday's low or not. We have no idea. But if we get there and then we see resistance, well, now we have information that tells us to get short. Okay. So we want to always know, where are these key levels where something might change in the market. So the opening price is a really important level because it is one of these key levels. So let's just come up with an example. We got 2 minutes till the market opens. Let's say the market opened this morning and immediately started to go up. Let's say it opened right at 68.09. Okay. And it started to push up. Well, what are the people that are doing business? What are they doing in that moment? First off, more of them are going long, right? If more of them were going short, price would go down. If it was the same number of people going long and short, price would go sideways. So the fact that price is going up is telling us more people are getting long. What are most of those people probably doing if they're getting long this morning? They're probably targeting getting to the previous day's low, right? Because a gap is a widely known thing. Gaps often fill on the first day. Lots of traders do nothing but trade gaps. And so those traders will be going long when the market opens. So if the market opens and they all start to get long, where are they probably putting their stops? You guessed it. At least some of them are going to put their stops right below that opening price. Okay. So now let's say the market is not able to get to the previous day's high, the previous day's low. And instead it gets resistance and it comes back down through that opening price. What do we expect to happen as it crosses through that opening price? Liquidation, right? We expect to squeeze a lot of the buyers that have been going long, let's say for the first 5 minutes or whatever of the day. As the market crosses through that opening price, we're taking old business that was long and we're forcing them short. So we get a little bit of a liquidation. Boom, the market drops really quickly as it passes through that opening price. But then what comes next? Because from there, there's really only a few things that can happen. Either the market comes back up, turns the opening price into resistance, in which case that's new sellers entering the market, and then it's going to keep going down, or it comes back up and it doesn't get resistance, in which case all we were doing was taking out those stops, and so we immediately start the gap fill once again. So that's why that opening price is so important, because from the opening bell, traders are getting long or short. And they're often using that as the place where they put their stops. And then what the market does next when it comes back there gives us a good idea. So today, the first move is down. Okay. We made really no attempt whatsoever to fill the gap. So right now, traders are shorting the market. If we cross through the opening price, which looks like it's going to happen as I'm talking, there it goes. What is the first thing that happened? Right there. What just happened as we crossed through the opening price? We just took out a fuck ton of stops. Look at that giant green dot right there. Okay. That is showing us that because the first move was down and traders were shorting, where was their stop? You can see it in the order book. You can see it right there. Their stop was right at the opening price. So now what happened? We came back through that opening price and now we're getting short covering. Pop, 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 pop. Market is moving up really fast. Look at that. Another huge green dot. That's a sign of shorts getting squeezed, not longs getting in. Okay. So we're squeezing more shorts. Pop, 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 pop. That's great. Does that mean we're going to fill the gap? No, not at all. All that means is right now at this moment, we're squeezing overnight shorts. Overnight sellers are exiting out of panic because they thought the market was going to open and immediately keep going lower. And so they put their stops. Once the market started to push lower, they put their stops in here and then the market came back for them. Okay. So that's a key level to be aware of because of this and this, because it gives you short covering. And you want to know if the market is going up right now because of short covering, right? Because people that were short in the overnight are getting out, or if it's because new buyers in the regular trading hours are going long. Why? Because if it's just short covering, they do not need to fill the gap. They can just push up here into the very first little bit of resistance and then turn around and head lower the rest of the day. But if it's new buying, right? If the market pushes up here and then people are getting long, well, that is likely to fill the gap. Why? Because where are those longs going to take profits? On the gap fill. Okay. So we must always be obsessed with, is this moment right now short covering or new buying? And then monitor what could happen next based on that. The opening price is a key level where you'll see that happening. The next one is the gap fill. So if the market, and I'm not convinced yet, this is still just short covering. If the market is going to bring in new buyers, it'll probably pull back down to this area just above the opening price. 68.17 and find support there. If it does, those new buyers should be able to get us to a gap fill. Okay. Let's say that happens. Let's say the market comes down here, new buyers step in, they buy the dip, the market goes back up and it fills the gap. This is that next level where something can change because we know a lot of the people going long are going to be taking profits there. So that's where the market runs out of buyers, gets resistance, and turns around and comes back down. If it doesn't, if it gets up there and it stays up there, it's sending us different information that we got more new buyers and we're going to keep going up. Okay, so it looks like we got another wave of short covering here. It might be enough to fill the gap. So am I suggesting that you go long right now at the high? Absolutely not. Absolutely not. Even if we've got another 10 points before the gap fill, you don't chase price like that. We got to wait for the short covering to end and the market to dip back down into a support level. Then we have to see the support with our eyeballs before we can trust that this thing is going to keep going. But it definitely looks like it's going to fill that gap. And if it fills it without us, if it goes straight up and fills the gap, no problem. We're just no longer looking for a long trade, are we? Right? We're no longer looking to buy support. Now we're looking to see what happens on the gap fill. Do we get resistance? Then we're getting short. Do we not? Then we're getting long up here. And as we discussed, even if you get long, and I'm not saying to get long right now, this is short covering, but I'm just as an example, even if you wait for the market to get back up here, spend time and bring in volume, you still have a high probability from there to there of getting up to this weak reference. So you don't need to feel FOMO right this minute to get long. If the market opens and it just gets short covering and it straight up fills the gap, you don't need to feel bad. Oh my God, I should have been in a gap fill trade. You could have, but you would have had to execute it in about the first, minute of the day today. You would have had to immediately put in a stop buy order to catch that move on the way back up. But if you didn't, there's no reason to have FOMO. There's no reason to panic. There's no reason to feel like I missed every opportunity for the day, because if we push up into yesterday's range and we get new buying, there's plenty of opportunity on the way up. And if we push up into there and we get resistance, guess where we're going to come right back down to? The opening price. So even if you miss the move up to the gap fill, you might be able to catch the same move on the way back down. Speaking of which, that is what we are getting. Short covering straight into a gap fill. So this increases the odds that we will get resistance in the lower end of Friday's range and come back down to the opening price, because it wasn't new buying that got us up here. It was shorts exiting. And so you say, how do we know the difference between new business, new longs, and shorts covering? Well, one of the telltale signs is these dots that we have on Bookmap here. These are what are called volume dots. And basically what they are showing us is the difference between the number of buyers at a particular level and the number of sellers. So if you see a green dot, that means that there were more buyers at that level. If you see a red dot, it means there were more sellers at that level at that moment. The larger the dot is in size, the larger the difference between the two. And you're only going to get really big, large dots at a moment where you're sweeping the order books. Okay? Because that's the only time you're going to get enough of the business one way or another to have a big dot. So what you're looking for is, if the market is going down and you're getting big green dots at the lows on the way down, that's support. That's somebody buying the dips. But if you get the green dots at the highs, as we have this morning on the way up, it's happening once again here inside yesterday's range. If you're getting those big green orders as you push up, that's not FOMO. That's stops getting taken out. There were stops in there and boom, they took them out. There were stops in there and boom, they took them out. And there were stops in there and boom, they took them out. So if you're trying to figure out, is the market going up right now and this is short covering versus new buying, the first thing you want to look at is those stops. Okay. So, man, I'm just trying to teach all these concepts and the stuff is moving so fast, I can't even keep up. So now we just got resistance inside yesterday's range. That is bearish to see. Okay. So that right now means we filled the gap and that brought in sellers, okay, as we filled the gap. So we're now watching to see, can we hold this area around 68.42 as resistance? If we hold it, we're looking for a move down through the opening price. If we don't, we'll spend some more time inside yesterday's range and we'll find out. So we're literally looking for that resistance right now at this moment. Also, just FYI, if anybody wants to ask me questions and you're watching in the Discord, head to the English traders floor. So we'll no longer be hanging out at the Charles Futures. We'll be hanging out on the English traders floor. I assume they mean English speaking because I am not a Brit, old boy. Okay, so that resistance just held at yesterday's low. So this is what we call a gap fill and go. This is now bearish as long as we remain below 68.41. Okay. Again, if we cross back through and we get back into yesterday's range, it's no longer bearish, right? Because that's a key level where then the people that are shorting right now, they get squeezed if we come back up into yesterday's range. But for now, they're selling, which tells us this is a gap and go, which tells us we have momentum down. So as long as we stay below 41, we assume this market is going lower. We get back above 41, we're back in neutral. And you see the difference right there? That's new buying. We just got some new buying, some actual support. What's the difference? These green dots were as the market was poking up. This green dot was as the market was coming down into what was previous resistance. And it's now turning it into support. So that's a key in understanding. You need that new buying if the thing is going to keep going up. So let the tug of war begin right here at yesterday's low. As I said, I am bearish as long as we remain below 41. Crypto Rider says, what do you think about Bitcoin and oil? Well, let's see how we handle the previous day's low, and then we'll take a look. Obviously, I think oil's going to go up. Oil's going to get a little more expensive. So it appears that this liquidity at 68.43 is real orders that want to fill. I thought that was going to spoof when we came back to it, but they're actually letting that fill. So we will need to poke into that 43 level a few times and fill that liquidity. I'm still bearish until I see what happens after we do. That's sellers that want to get short there, or a seller that wants to get short there. Okay, nothing impressive. Okay. I am now back to neutral, no longer bearish. There is something I can see on the Bookmap screen right now that is telling me we need another poke to the high. Can anybody tell me what it is? Come on, chat. You guys know the answer to that. Anyone? It's a Bookmap thing. You speak now or we're going to miss. It's not going to be a good call if you guys wait too long to answer. James says more liquidity above. No, that's not the reason. That is something to make note of, but that's not the thing. Icebergs, getting close. Stops. Willie T got it. So, as we discussed earlier, I used the green dots as a way to recognize short covering versus buying the dip, right? But what do I use these large stop indicators for? I have my settings set up so that it only shows me when a very large number of stops gets taken out. Okay? And what have I learned? That as long as the market is able to take out large stops, it's just going to keep going up. So we poked up and we took out 100 stops. The next question was, if we poke up again, can we take out more stops? If we can, we'll keep going. Well, we took out another 200 stops. So then the question was, if we poke up again and we take out stops, okay, then we'll keep going. We poked up again and took out more stops. Okay. This was the critical moment right here, just a second ago, when we were talking about that sell order that was sitting in right above yesterday's low, right above Friday's low. Once that filled, I noticed that we took out another 50 stops there. And so my brain instantly said, I am bearish and I think this market is going to go lower, but I have to get neutral in my trading right now, because the fact that we took out those stops meant we were going to make another poke to see if we can take out more stops, which is, by the way, what we're doing right now. So this is not really bullish in my mind. I know it seems like it should be because the market is going way up really fast, but to me, this is still just a hunt for stops. Okay. So bigger picture for the day, I'm still, neutral to bearish right now. But for the moment, it looks like they're going to head up to the overnight high first before they run out of steam and come down. Because if they keep poking up and taking out stops, they'll make another poke. So the last set was down there at 40, 40-ish. Let's see if we can take out a huge set of stops up here around the 50s. If we can, it'll keep poking again. Stops, stops, stops all day long. Take out stops while I sing the song. Okay, getting close. Yeah, it feels like the market wants to make a high of the day. It just hasn't made it yet. We need that one more poke. Let's take a look at Bitcoin and oil. Yeah, oil's up. So I'm sure nobody is surprised to see. Blink. Now, oil always fills its gaps, but not immediately. So this is the last time we got a big gap up like that on oil. Oops. And you can see it definitely came back and filled that gap, but not without, first spending a week and a half going higher. So yeah, I'd be saying initially today, I'd be looking for support around, this is the crude oil futures, around 69.69. Be looking for a bounce there. If it doesn't get it, then I'd be looking for it to head down to 67.27. And I think there's a very good chance that it will find support in there and then turn around and head higher. Obviously, oil gets more expensive when there's conflicts in the Middle East because it gets harder to ship the oil out of there. As far as Bitcoin is concerned, I'm probably not going to have much to say. Nope, nothing to say on the corn. There's definitely something funky happening with Bitcoin here, but it is not showing signs that it's ready to go up. Not even a little bit. So my guess is it needs a dip down towards 56 first. So this is a no trade zone for me. You could pretty much just call that right there a no trade zone. Let them chop it around. Do I think Bitcoin is eventually going to make new all-time highs? 100%. I absolutely think it will go above, 130, 140, 150,000 at some point, but I can't tell you when. That's the problem. I can't time it. And I don't think this looks like a good entry. So if I was long Bitcoin now, I'd hold on to it. I wouldn't exit. Even if it were to drop another 20 grand, I wouldn't exit. But I certainly wouldn't be buying. I wouldn't be adding here. Not unless it's a dollar cost average. Okay. So we got to the overnight high. Here's the next place where something could change. I would describe myself as neutral to bearish on a daily time frame. So now is the moment where they can change my mind. If they can start to bring in new buyers above the overnight high, then we have momentum up intraday. Another thing that's worth mentioning, remember that when the market has big, crazy initial balances, that's often pretty much it for the day, right? So you make a big, huge move in the first hour, you've probably made a majority of whatever move you're going to make that day. So do not feel a need to force trades here. Wait to be patient, because this thing is probably just looking to make a high and then it'll come all the way back down to the opening price. So what was different this time? Oh, not quite. Sim says, is there a GEX Spot Gamma add-on in the Global Plus subscription to Bookmap? No, those Spot Gamma levels that you're seeing over there, you get those through Spot Gamma. So if you sign up for their memberships, you get those levels that update each day for you. It just makes it easier to see the different price compared to the SPX, which is nice. Okay, well, not to sound like a broken record here, but I do think this market just wants one more poke to the upside. We have not quite been able to get good excess on the high. So you can see how close that first A period high was to the overnight high and to this weak L period low from Friday. So that's an unfinished auction. There's definitely stops up there if they can poke up. So I think the market will want one more poke to take out that last set of stops. We were also able to take out stops with the last poke, so they always try once more. But I have a feeling that's where the thing runs out of steam and comes back down. So I'm now watching 63 for resistance and a reversal. So what we often talk about is understanding tempo. Tempo is the speed that the market is moving, the speed that the numbers are changing. If we just look at the Bookmap chart so far this morning, what can we clearly see? We had very fast tempo in the beginning. I mean, right from the market open, it was just boom, 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 boom. Now that tempo is starting to slow down. We're starting to grind a lot more. So that is telling us that the emotional reaction to the news is finally getting priced in. The market is finally accepting it. They're making their decisions about how they want to be positioned for the day. That's finally starting to happen right now as things slow down. Okay? Hence why I think we have one more poke and that'll be it. That'll be the high of the day. Because the tempo got slower. We always think about the market like it's an art auction. How does an auctioneer do their job? As long as they're looking out and they see, hands going up in the air, as long as they see the people are bidding, they will just keep pushing that price up. They will push and they will push and they will push as long as people keep bidding. And so the auctioneer in the beginning, he moves the bid as fast as he can. When he's first starting and there's lots of hands going up in the air, he's moving that tempo very fast. I have 1100, do I have 12? I have 1200, do I have 13? Do I have 13, do I have 14? I have 1400, do I have 15? Do I have 1500, do I have 16? 1600. He's going super fast in the beginning because the faster that he goes, the more people that will throw up their hand and want to do business because they're chasing it, right? It's the excitement. It's the thrill. It's the, oh my God, I'm going to miss it. I have to buy it here. And so they just keep pushing that price up. But once he starts to run out of volume, right? Once there's fewer and fewer hands going up in the air, what does that auctioneer do? He starts to slow things down. We got 1800. Do we have 19? 1900, sir? 1900. Do we have 2000, ma'am? It's going to sell it for 1900. 2000. Are you sure? 1900. Going once. Going twice. Sold, right? So if we want to know when is the market fixing to make a high or make a low and then reverse, one thing we want to pay attention to is the tempo. If the auctioneer, in this case, the market, has to start going slower and slower and slower to convince more people to buy, that buying is going to run out soon. The other thing that we watch for is taper in volume. The volume tapering off. We have okay taper at the high right now. It's not really bad. That's okay taper, but that's not good taper. So that's why I think we need one more poke up. We need to literally just see less and less and less and less people going long. Then it'll be ready to turn around and come back down. So always pay attention to these things. Is it old business or new business? Is it shorts covering or new buyers buying? Is it longs getting liquidated or new sellers selling? Also, know where the key levels are, where things can change. Okay. And then pay attention to changes in volume and changes in tempo when you get to those areas. Obviously, we have some news coming out here. That's why Bookmap has gone dark like that. Whenever you see, Bookmap just go completely dark all at once, there's news. Usually it corresponds with an exact time of the day, somewhere on the 15-minute mark. So we'll let the news bots do their thing. They're going to poke the market around a little bit here. And then once the color starts to return, once we start to see liquidity like we had before, then we can trust support or resistance levels from there. I'm still on my one more poke and then reverse theory here. And what you have to understand is that's all because of the fact that it was short covering that got us up here. It's the fact that we just took out stops. That's what got us here. And so, sure, if the tempo slows down now and we spend time and we grind around in here, we will absolutely be able to keep going higher. Of course. But what I think is more likely is we're going to get that one final poke and then come all the way back to the opening price. Just because the tempo has slowed, the volume is getting thinner. There's fewer and fewer stops left to be taken out. Trevor asked earlier, what confirms a gap and go? Resistance. So resistance is always a sign that the sellers are taking control. So if it's going to be a gap and go where it instantly sells off, the market would open and it would get resistance before filling the gap, right? That's a sign it's a gap and go and it's going to go lower. Or if it fills the gap and then it gets resistance around the previous day's low, it doesn't have to be exactly to the letter, but right around that low, say within 5 to 10 points. If it gets resistance, then that too is a gap and go. Today, we never got that resistance. We poked up into yesterday's range, and since we entered, so yesterday's range is 42. So right here, since we entered, we basically just stayed up here. We spent time and brought in volume. Okay, so now we've done it. We've finally got good access to the upside. We're getting taper in the volume, but we were able to take out another set of stops. So that tells us we don't want to go short yet. As long as the market is able to keep squeezing sellers, it'll keep going higher. So here's how I would see this, because unfortunately I got to bring this stream to an end. I would say as an intraday trader, so a trader who is going to enter trades and exit within a single day, I would basically say I am now bullish above 68.50. So you can see this node right here around 68.50. If that can hold as support when we come back down, then that is a sign that this market is going to keep going up. Okay. If it does not hold as support, we're probably heading all the way back to the opening price. So I would describe myself as bullish above 68.50. Again, just as an intraday trader today. See, more short covering. Man, what a morning this is. Lots of shorts getting squeezed here. And I get it. Charles is over here telling you it's short covering. Don't trust it. Don't FOMO in at the high. And then it just keeps going higher. And he says, it's almost over. It's all short covering. And then it goes higher again. And you think this thing is bullshit. This doesn't work. No, it absolutely works. Trust me when I say this market is going to turn around and come back to the opening price. It's just as long as it keeps taking out more stops, it's going to keep poking. And it will shock you how far they can go. When they're just getting short covering and FOMO buying, they can just keep it going and going and going. I mean, it will just blow your mind how far it can go. But then it blows your mind by how quickly it completely retraces once it runs out. Once it runs out. So, as I said, bullish above 68.50, bearish below, because they are fixing to squeeze anybody who's FOMOing in up here when they come back down through 50. This is a lot of short covering. And so you say to me, you say, well, Charles, I thought the market was going to go down. We got war. We got bad news. Look how far the market went down over the overnight. And then I say to you, the problem is those overnight sellers were all emotional. They were emotional sellers. And so the market just instantly went and squeezed them all in what I would describe as a pretty breathtaking move of short covering here. Just told everyone, fuck you. We are not breaking out to the downside. We are still pinned. We are still going sideways. And thank you for all the free liquidity. Any final questions for me before we say goodbye? Remember, if you're in the Discord, you got to head to English Traders Floor and leave your questions there. And if you are in the YouTube, you can just throw them in the chat. There's a question here. He says, Charles, your overnight starts at 5 p.m., 4 p.m. So 9:30 a.m. to 4 p.m. East Coast time. That's regular trading hours. And then the overnight is everything else. So 4 p.m. to 9:30 a.m. And there's always a debate as to why to do it that way and why not use the run over time and da-da-da-da-da. That is just what works best when talking about gaps and spikes and all of the things that we use in our trading. So using that exact range is what works out best. 9:30 a.m. to 4 p.m. There's a question here. Can you explain the iceberg order at 6860? 6860. Yeah, that was a account that went long 1,000 contracts. That's what they did. They used those stops as they took out 1,300 contracts. So somebody that was short 1,300 had to get out, and they used that to get long 1,000. Can I explain why or what's happening there? No, I have no idea. It could be a person entering a long trade. It could also be somebody taking profits off of a short trade. It's just really hard to know. This may have been somebody that went short last week, and now they're saying, okay, let me get out of that short. It could be somebody who's looking at the look below and fail of yesterday's low, and they're now saying, oh man, in the days ahead, we're going to turn around and head to all-time highs. That's what we talked about. We got a balance area right here. If we are able to stay up here the rest of the day, that means in the days ahead, we're heading back up towards 7,000. Okay. So maybe that person's just getting long now because they're a swing trader and they're trying to catch that move over the next couple of days. But I can tell you no day trader is going long 1,000 contracts at the high like that. No chance in hell. They would not have a long career if they did that. So that is either somebody getting out of a trade where they got short earlier, or somebody getting into a trade that they're planning to hold for multiple days. Could also be an options market maker just balancing. So for example, last night, people bought a lot of puts because they were bearish. And so a market maker went short some futures contracts as a hedge for all the puts that they had sold. And then as the market has gone up this morning, people are exiting those puts. So that allows the market maker to buy them back. And so once they buy them back, they have no risk anymore. And so then they get out of their shorts and suddenly they go long. And maybe that was the magical level where that compute happened. It's really hard to know. The thing I look at the icebergs for is not to try to predict what the larger players are doing, but simply to try to recognize where the larger players are doing business. Okay. That's really the key. So in this case, there's really no valuable information in it because there's just as much icebergs going short as going long. You know what I mean? Sure, somebody bought 1,100 contracts long, but a few minutes beforehand, somebody went short 900 contracts and then another 73 and then another 500. So there are large players going short here too. So there's not much to take away. One thing that I learned from that Paul Tudor Jones documentary was that a lot of times when you see whales do something, they are not actually doing it because they think the market is going to go up or down. They're doing it to test out and see, right? So, you know, a market will start going up and a large player is like buying and buying and buying and buying and buying on the way up. And then they'll dump a huge portion, right? And they're dumping to see, does this reverse the market and send it back down? Or does it bounce? Does it bring in new buyers? And then if it does, they start buying again, more and more and more and more. So just because you see, you know, a large set of orders go long or short at a particular moment doesn't mean the market is going to go up or down afterward. It may just be they're testing the waters. And they, you know, they maybe get short 600 contracts and you think, oh my God, somebody's getting short 600 contracts. And then you notice that they get long 500 contracts, you know, 10 minutes later, you know, at a higher price. And then you think, well, that's horrible trading. And you're like, it's not, because they're playing a very different game than you're playing. They'll throw 500 contracts in or out of the market just to test the waters, just to see how the market reacts. That has nothing to do with their overall position, which may be tens of thousands of contracts. You know what I mean? So don't get too obsessed with what the big players are doing, because they're probably just testing things out. And by players, nowadays, I'm talking about computer programs. All right. Well, they did it again. Another set of stops at the high. So this is bullish, and it is likely to head to 68.82. That is the next major resistance level I see is 83. So the momentum continues to the upside. I have to admit, I'm a little bit surprised. Even though I constantly say it will shock you how far they can push it when they have short covering and FOMO buying, I still get shocked. And the reason I'm shocked is not how far it's gone, but how fast it's gone there. The fact that we are getting no real dips at all. The market is pushing to a higher price, and then it's just going sideways. Pushing to a higher price, going sideways. Pushing to a higher price, going sideways, and pushing again. And these sorts of moves, they take your breath away because they just keep pushing and pushing and pushing. And you're like, oh my God. But just know, whenever it runs out, it'll come back. With that, I will say goodbye. If you are a member of the Pirate Traders Brigade, head on over to the live stream. I'll see you there in about 2 minutes. If you are not a member of the brigade, why not join? It's only $20. $20 is literally less than 2 ticks on the ES. So if in an entire month of sharing my ideas about the market, I could help you get in a trade where you could make 2 ticks of profit, or I could stop you from getting in a trade where you may lose 2 ticks, you've just paid for your monthly membership. And you have the guidance of my opinions every single day. So we'd love to have you. Consider joining. There's a link at the top of the page, top of the screen, piratetraders.io/join. Be there or be square. You friggin' square. One final question. Does anyone know what happened to that Bookmap Live from a year ago? It was a clean Bookmap Live with all the features and callouts or icebergs and stuff. I do not know which you are talking about, but yeah, Yeah, they're all available in the education tab on the website. If you just go dig through, you'll find it. Also, just as a side note, because I've gotten a lot of questions about Bookmap recently. If you ever have questions about Bookmap, the best thing you can do is wait until Bruce is live streaming. They have a schedule here somewhere. Yeah, down here. So just look for these ones when it says live all markets with Bruce. It looks like there's one today. It's happening right now. Oh my God, I'm stepping on Bruce's time. Sorry, Bruce. But anyway, if you join these streams right here, this is the best place to ask like beginner questions about Bookmap, how to set it up, how to find support and resistance, how to read this, how to do that, all that stuff. He covers that all, and he's really the best. All the other people are more teaching their style of trading and how they use Bookmap in their style of trading. But he's really the one that's just focused on, you know, an expert in Bookmap itself and how to set it up and how to function. So if you guys have questions, just jump in one of his live streams and ask questions. There's generally very few people there. And so you can have all the time to yourself to ask as many questions as you'd like. With that, I will say goodbye and head on over to the private stream. Thanks, everyone.